Good afternoon, everyone, and welcome to the Daily Volatility Box report for August 29th, 2019. We are TOSindicators.com, home of the Volatility Box. Today was an awesome day of trading. It's more of what we like to see. We had a lot of trade opportunities. We had more of our trade opportunities win than lose. In fact, we actually only had one loser today, and that was our second trade on the Dow futures. And we stopped out of the second trade for a break even literally at the end of the day because the Dow had done a whole lot of nothing. So if we disregard that second trade, we really had 7 trades in total where we actually had risk on the line, and all 7 were winners. And our total P&L for the day was a little shy of 5 grand, so we ended the day up 4972.50, which is awesome, especially after slightly more muted days Monday through Wednesday. I'm glad that Thursday, and we're used to seeing this for the past couple of weeks now, that Thursdays are the ones that give us the volatility, and Thursdays and Fridays have been at least making our days for the better part of the past month, I think. But anyway, so great day of trading. Let's actually talk about charts. Something interesting, which we literally talked about in our video yesterday. So for those of you who listened and took note and essentially tried to apply it, that same gold futures fade appeared once again in that 6 to 7 a.m. hour, which was our trade in the gold futures, which was awesome. So that talk about doing homework and having it pay off directly in terms of hard dollars. So that's what we like to see. And then the rest of the trades we'll go through as well. Let's get into charts. Start with the S&P futures, and we'll make sure our timeline is on just so that we can very clearly measure when we're supposed to start looking at the volatility box. All right, perfect. So we'll approach this the way we approach all of our days, where we start with the first hour of the trading activity, and we check to see whether or not we breached either side's aggressive volatility box entry lines. As you see, price action didn't come remotely close, and that was our okay to continue to use the aggressive volatility box for the remainder of the day. Now, if we zoom in, our entry came right here with this fall inside of the volatility box. We fell perfectly inside of the entry lines. Let me, if I can get my circle right here. Whoops, right there. Sorry about that. Our stop was outside of the volatility box. We gave it 7.5 points of room. Our first target was the 7.5, which was hit right here. And our second target was the target line, which was 11.5, hit right here. And that gave us both a T1 and a T2 on the S&P futures. A similar sort of setup appeared on the NASDAQ and the Dow as well. We'll cover all three, but we'll start from scratch. So we approach this market the way we approach all of our markets. We look at the first hour. We check to see whether or not we breached either side's volatility box entry lines. We did not, and that was our okay to continue to use the aggressive volatility box. At the same time we had the entry in the S&P futures, we also had our entry in the NASDAQ futures. Our stop was once again right outside of the volatility box, 25 points wide. Our first target was the 25, and our second target was a target line, which was at 44 points. We hit both our T1 and our T2, and it was shortly after hitting our T2 that we really started to stall out. So talk about the volatility box really helping us time our exits nicely. Okay, let's also review the Dow entry, and we'll talk about both the entries in the Dow. So as we'll line this up once again, but what you should see is once again, we haven't breached either side of the aggressive volatility box's entry lines. That's our okay to continue to use the aggressive volatility box. And our entry came at the same exact time. We fell a little bit deeper in the Dow, which may be just an observation. Not sure you would have done anything differently with that. Our stop was out 65 points outside of the clouds. First target was the 65 points, and our second target was our target line, which was at 90 points. Both targets hit, and that first trade was good for both a T1 and a T2. The Dow, however, continued to rally a little bit more, and it then gave us our second entry to go short at the volatility box entry lines. So we went short right here. Our stop was outside of the volatility box right here. Our first target was the same number of points that we risked right down here, which we got close to a couple times, but we never actually ended up hitting it. And so you had plenty of opportunities if you wanted to take some profits. We didn't move our targets. We waited either to see if our target or our stop got hit. Once we commit the risk to a trade, we've committed that risk. And as we got towards the end of the day, we realized that wasn't really coming. And so we stopped out right there for a break even. Okay, let's move on to the gold phenomenon that we discussed yesterday. So what you may have noticed over at least the past few weeks of looking at our charts is we don't really talk about gold futures, but one of our users remembers, who a lot of you may actually know, has been noticing a pattern with the volatility box and the market open between 6 to 7 a.m. Pacific. So with that first hour where he fades the move that we essentially get in the gold futures with the index open using the volatility box only if we come to either side's edges. So as we continue to fall here, we had our entry in the gold futures to go long. Our stop was 5.5 points wide, right outside of the volatility box, and our first target was the 5.5, which is all we got. We ended up going to 5.8 until gold started to fall, and then you see why using the volatility box or any sort of price container on the gold futures, at least in recent history, has not been such a good idea. So focusing on the 6 to 7 a.m. for the setup in the gold futures, if you get it, great. If not, focus on the other markets that we have, the indices as well as crude, as well as the bonds. All right, we'll move on to crude. Let's revert back, make sure we're on the aggressive volatility box. Perfect. Okay, and we'll line this up. So once again, we'll approach this the way we approach all of our markets. We take a look, we see whether or not we breached either side's aggressive volatility box entry lines. We did not, which was okay to continue to use the aggressive volatility box, and we had no major crude reports or any of those news events coming out, and so we didn't have any reason to switch to the conservative, which make sure you look at the reports and you're aware if you're trading the crude market. Our first entry was an entry to go long right here. Our stop was outside of the volatility box. We gave it 20 cents of room. Our first target was the 20 cents, which was hit easily, but we didn't hit our second target. So our first trading crude, we hit our T1, and our second contract, rather, was stopped out at a break even in this puke. This puke then also gave us our second entry in crude, which ended up being the better entry that gave us both T1 and T2. So once again, our stop was right outside of the volatility box. We gave it 38 cents of room, so it's $380. First target, the same risks, 38 cents, which was hit. And then our second target, which was the target line, hit right here, which was 55 cents wide. And so we had 38 cents profit on the first contract, 55 cents profit on the second contract. And for those of you who like to trade the micros, there's also the QM, which, just in case you're curious, the volatility box presents the same setups, works the same way using the mini version of crude. And finally, we'll take a look at the bond market. So we'll approach this the way we approach all of our markets. We check to see whether or not price action breached either side of the aggressive volatility box's entry lines, which we see very clearly here that it did, which is our signal to switch on over to the conservative volatility box. Once we switched over, we had our first entry around the same time we had the gold entry to go long right here. Our stop was outside of the volatility box where we gave it 6 ticks of room, and we hit our target before we hit this wick hit the stop, and so we were able to target out of our 6 tick on our first contract, and our second contract broke even for stopped out for a break even. So we just hit T1. Hopefully today's video helped you to see the power of the volatility box, to see how well it works, how many opportunities it gives you. We were able to end the day up. I think we made more today than we have all 3 days of this week combined, and we've been profitable all 3 days of this week. We're now on our 4-day winning streak, trading with the volatility box. Today, once again, just to recap, we had a total of 8 trades that took place. 7 out of these 8 were winners, with the one trade in the Dow futures stopping out for a break even. Our total P&L for the day was $49.72.50, just a little shy of $5,000. And if you traded only the micros or only the minis, you still had trades in the S&P, the Nasdaq, the Dow. You had crude, and you had the gold futures. The only one that didn't have a micro or a mini alternative today was the bond market. But apart from that, even using the micros, you should have come out well on top, more than easily paid for your volatility box subscription. I think we had 2 users sign up yesterday, and both of them sent us the email today, the one that we're now getting used to seeing. But it's always nice that the first day of trading with the volatility box is already paid for a full year's worth of subscriptions. So we hope that you're starting to see the power of these models. If you're not a member, go ahead and sign up today, tosindicators.com/volatilitybox. In case you don't want to pay for any indicators, we also released our free Market Pulse indicator, just making sure that you get this announcement. We released this past weekend. If you'd like to download it, play with it, take a look, go ahead and visit the URL tosindicators.com/indicator/market pulse, and you can download it for free. All right, take care, everyone. We're excited to see what Friday brings. Last week, Friday was our best trading day. We are up really nicely headed into this Friday. So my plan is to protect my profits, is to be a little bit more cautious. If there's a reason to switch on from the aggressive to the conservative volatility box, I'll go ahead and do that. But I'll still follow my rules, follow the plan, and take the trades as they set up. All right, have a great day, everyone. Bye-bye.